process and how we go forward, we basically had looked at that time at some of the markets and how they're performing. And of course, GDP per capita growth in the Calgary-Edmonton corridor was very high. We weren't seeing quite the same numbers at the time in the GTA or Vancouver. And so my wife and I moved to Calgary, Alberta, and started into real estate investing. So lots there. I'll turn it over to you, Tahir, if you want to.
Thank you very much. Well, thank you very much. My name is THUR. I'm a broker of record for City Realty Brokerage. I am also principal broker of Canada Express Mortgage Inc. and also a team rep, licensed by Ontario Security Commission, working with the Access Capital Inc. We'll talk about that today. Also, I'm a mentor and educator. I provide mentor education services to real estate agent, broker, and also I'm a board director of Mississauga Real Estate Board and chair of an education committee. My focus has always been education, and this is how I do business, by educating more and more consumers as well as realtors and mortgage professionals, and also involved in the site plan development. I'm working with the site by acquiring sites and developing with builders to develop site for subdivisions. So this is small portfolio. You can visit the citydashboard.net, which is my portfolio, or you already know, on LinkedIn. But today is a great honor for me to start our 4th Global Connectivity Conference, Building Partnership. This is the 4th for LinkedIn, and we have a great honor to present our guest speaker, Peter German. He is a CCO and also partner with Access Capital Inc. He's going to tell us what is exempt market dealership is, how the private capital is raised for real estate industry and various other industries, how we can learn about it. And since you are professional, and where if you get a referral, a client to Access Capital, where you can get compensated. So Peter, floor is yours.
Excellent. Well, thank you again, Tahir. Appreciate your warm welcome, and it's a great to meet with you colleagues today and talk a little bit about where we sit in the market. As I mentioned, back being a bit of an entrepreneur in the early 2000s, we were really looking for where the hot markets were. And a big part of my early business career was in looking at rent to own, lease to own on the rental property side. And then went out there and thought, how can we secure more capital for our investments? And we looked at a number of ways to do that, whether it was joint ventures or working with a partner and forming small capital pools. And we happened upon one of the better securities lawyers in Calgary and came up with an offering memorandum. Now, an offering memorandum is a way to raise capital from anywhere from 50 to 5,000 investors or more. But it does put you in the area of securities. You are raising money and you have a bunch of rules to follow, and you have a bunch of requirements to look at to see if somebody can invest or not.
Peter,
and so the big part of our learning.
Peter, you can share the screen. I have given you the access.
Okay, super, thanks. A big part of our learning then was really around that whole process of, what can we, how do we raise that money? What does it look like from a perspective of the investor, and how are we doing on the regulation side? And making sure that we fit all of that into our approach to the market. See, a lot of investors are coming to the market and they're concerned with what they're seeing out there. They're seeing a lot of volatility, not right now, but in some markets, they're seeing negative numbers. There's some really positive numbers right now. And they're also concerned about where things are going to go for cost. Because if you think about it, there's a lot of cost built into any investment you make. We're all familiar with fees and brokerage fees for completing the sale of brokering a mortgage or the sale of a house. And in the same way in the markets, of course, stockbrokers have fees and commissions on any transaction. But one of the big issues is systematic costs. So this would be where a fund has a 2 or 3 or 4% cost per year, even if it's not really performing. And there's a lack of alignment then between the manager and the investor. You see that fee disappearing off of your books, off of your performance, even when you actually probably made a good decision about what assets you want to invest in. I've also noticed, like in more broad discussions with angel investor groups and appearing on a number of economic forums, the people are really concerned that they can't do anything other than ETFs or mutual funds, or maybe if they're really quite into it, public stocks. So they have no system or no partner to help them acquire other asset classes, other than working directly and owning maybe 1 or 2 or 3 properties. So our firm, Access Capital Advisors, actually sits right in that key point. We're a licensed securities broker and dealer, and we have our roots and our background in real estate. So we believe that provides a very significant advantage for investors that maybe have some money in their RSP and don't know how to use it for a rental property. Or maybe they have an inheritance and they're concerned about being in just one market. Or maybe they're just concerned about how volatile a housing market might be in one particular city and want to diversify. I contributed to a chapter in a book about 10 years ago, put out by a group called Carswell, and it was taxation and investment strategies for volatile markets. And in the last 10 years, it's never really not been volatile. So it's really key to look at that. So why private investments, and how could you do that safely? If you're concerned about volatility or being locked into one geographic region, how could you broaden things out? And how can you participate in that? Well, this goes back to a question that actually has been asked many, many years, centuries, in fact. Are all your eggs in one basket? If they are, then you might need to look at that. And academics have looked at it. There was a guy named Harry Markowitz in 1952. He wrote in the Journal of Finance an article that came to be referred to as modern portfolio theory. And it's a way of managing risk. So for this example, just think to stock markets and think about, say, a transportation company and a service company. If you knew that there was going to be a boom in transportation, you'd obviously put all your chips on the transportation company. You'd buy those shares. And if you knew that transportation was going to take a hit, but retail and service industries are going to do well, you'd switch it. But we can't know that. So what Harry Markowitz looked at is, if you're going to go into the market, how do you divide your financial assets so that you get the best performance for a given level of risk? And it's really this: if you have 2 completely non-correlated investments, 2 investments that are going to act differently in the same economic conditions, then if one gets hit by $5 and lowers its share price or doesn't grow, and the other one picks up and grows that $5 that you would have maybe lost elsewhere, you're going to end up at retirement in the same spot. And so your $54 goes to $96 because you've thoughtfully diversified. Well, if we expand that now and don't just think about stock markets, don't just think about bonds, but think back to what we really like, which is real estate, then we really have to think, how can we use that same diversification idea and maybe deploy some of our assets somewhere else? Because you see, there is another bigger risk. We're all pretty familiar right now that markets are hitting highs. But do you remember 2009? Do you remember how low it was in March of 2009? Or even last year in 2020, we had a very significant market downturn. And if you needed to liquidate during that time, you were capturing a lot of losses. So rather than just thinking about correlation in terms of 2 stocks, what if that blue line is the private market and the gray line is the public market? That's how a diversification into private capital works. We look for those assets in the private market that actually will continue to perform even if a public market goes down. And we want stability. We want decent returns. And we want to be able to play in those same areas: real estate, energy, finance, and still make very good returns, even if we're not in the public markets. So there's a set of rules that make that possible. They're called National Instrument 31103. This is the set of rules that regulates private capital markets. So just like in your business day to day, whether you're a real estate broker or a mortgage broker, or perhaps in any other sphere as well, there are controls and rules around it. In the national instrument, there is a set of rules and requirements for what's called an exempt market dealer. Now, this is a type of securities firm, an investment company that actively sells, researches, and reports on private capital market investments. So we don't deal with ETFs. We aren't into the stock market, and we're not building mutual fund portfolios. Instead, we're every day exploring, researching what's happening, let's say, directly in the rental real estate market, perhaps in Hamilton, maybe in Ottawa, maybe right across Canada, or Canada, US, and even Mexico. One of the funds we work with just sent us an update yesterday. They sold a large office and residential building called the Star Metals building in Mexico City. And they sold it to someone we all know and love, Mark Zuckerberg's family office, and they made a significant profit. So investors that come through Access have invested in the fund. The fund owns the building in Mexico City, and when that building was sold, there'll be a profit coming back to our investors. So that's something of a private capital investment that you can only get to through an exempt market dealer. Now, the exempt market dealer tries to do what any good securities broker or financial advisor would do and divide it up and say, well, do you need income or growth or both? Are you more interested in real estate or perhaps in energy? And we look at how we balance that out. And when you need to have that set of discussions, you talk to somebody like Tahir. Tahir and myself are both what are called dealing representatives. We are required to take numerous courses each year to qualify and stay eligible to be investment advisors in our market. And then on top of that, we are in place to effectively guide our clients through that discussion, to make sure that they understand how to participate. And so we'll sit down with that client, and often we see that they might have a rental property or maybe a holiday rental, but they're probably mostly in stocks and bonds and mutual funds. And if that market goes down or is negative, it will really affect their financial performance. So we may really try to rebalance that and look at how private assets could add to their portfolio a measure of stability or income that they're not seeing elsewhere. Now, you'd think, well, this sounds really good in theory, but how does it work out? Well, interestingly enough, some of the largest funds in Canada and the US are already on this trend. In fact, it's a many decades old trend that you see in very wealthy families, in pension funds, in government or sovereign funds, or in university endowment funds. If you look back in the past, OMERS, the Ontario Government Pension Plan in the province of Ontario, Canada, used to be 82% stocks and bonds. They took a real hit right around the year 2000. I don't know if you think back, if you were watching any financial news at the time, but in the year 2000, 21 years ago, this was a very bad time of year because the market had tanked by about 60%. And we're talking, when I say the market, I'm saying the public stock markets and major indices in the market had taken huge hits. And it was really a result of the tech boom. In 1994, when the internet really started to get exposure, we saw 5 or 6 years where we thought everything would be on the internet. That was the birth of the iMac, of the iPod, the Internet of Things. And for a while there, you could put just about any company on the stock market, say it had something to do with the internet, and it would triple its stock price in the first 4 months. The result of that is that pension plans and many other investors, institutional or local, probably put too much money into tech. And when tech bubble burst, we saw the markets drop. Well, that can't happen for an Ontario government pension fund. So they moved funds like crazy, and they went from a high weight on stocks and bonds to 43% private in just 10 years. And now they maintain roughly a 50-50, and that gives them a lot more stability and regular income. In Canada, our CPP, or Canada Pension Plan, is also one of the best run pension plans in the world. And it includes billions and billions of dollars in real estate investments, making the Canadian Pension Plan one of the largest private investors in the world. And you can see it's divided up there: infrastructure, consumer discretionary, real estate, consumer staples. You look at across the border at the Yale Endowment Fund, and they are more private than public. They keep to about a 60-40 mix where 60% is private. And you can certainly update that at any time. Just check out the Yale Endowment update. So when we look at it, we agree. We think that clients should have capability to participate in private investments, and they should fall within the guidelines of all the rules, the national instrument. And as a dealer, we're trained to give people a little bit of assistance in setting that up. So we may look at, how they can participate in direct ownership and point out that, look, we see 40 or 50 of these funds every year. Here are some of the best ones that we've seen. And we'll be looking for good reporting, consistent returns, and leadership that's done it before. A portfolio then might have a fixed income component. We might look at mortgages and leases and rents to provide a regular income in the 4 to 6% range. Some of our best performing mortgage companies return 8% to investors, paid monthly into either an RSP or an open cash account. Where can you get 8% paid fixed rate? Not too many places. Then we might add a little bit more perhaps in equity focused investments where there's income and growth. And in those cases, we're maybe seeing a little less return on a monthly basis, but maybe more increase in the asset value. We have an investment we approved at Access some years back in a car wash. Car washes might sound crazy, but think about if you've seen some of the best car washes in the market. They have a very small piece of property. They monetize on how many cars go through that tunnel every day. And right now we're watching our online video from time to time as a new property is being developed in Vancouver on Lougheed Highway. Vancouver is a very dense urban city, huge demands, and there is just not enough car washes in the city. So this particular car wash is projected to yield around a 20% per annum return. Not all is income. Some of it will be income and some of it will be growth. Last but not least, we at times will participate directly in the equity in a project. These would be projects where you place money with a fund for a period of time, 3 to 5 years. An example of this is investing right now in Canadian farmland. Canada is one of the most productive, efficient, and environmentally controlled agricultural producers in the world. And our farmland, strangely enough, is actually about 40 to 50% lower in price than other countries. So we've seen a steady 11 to 12% return in investing in farmland, and that's been demonstrated by funds based here in Canada. So to get access to all of that and to kind of look at it, you need to be in touch with somebody that is a dealing representative working for a licensed EMD. And you can trust that they have to keep their standards up because every year we get reviewed. As I was saying right at the start of the call, we have had auditors in on our firm here last week and this week, And that's a very standard process for any broker or finance group. But we apply it as well to the investments that we're working with. So we'll do a detailed review of their business plan. We'll do criminal and credit checks of the personnel. We'll do financial audits and review their previous history. And we're really looking to see, have they done it before? Because if we're going to invest our hard-earned money or our clients' hard-earned money, we want to be sure that they are a proven quantity, that they've done it before. And then secondly, we want to know that they make money if the investor makes money. We don't want to see a situation where, like a mutual fund, they could just take 3 or 4% off the top every year, even if they're doing poorly. So there's a lot of work that we do, and that's what we add value for you as an investor. And then we assist our investors to put out some strategy. This new REIT that we're working with has a targeted 8% yield. It has a minimum investment of $500. You can put it in a self-directed RSP or in a TFSA. It's very tax efficient. If you don't use a registered plan and just invest cash, most of the REITs will pay back what's called return of capital. And this is an amount that comes back to you. The tax is deferred until much later. Every return you get is just tax-free.
Peter, can you
And
tell
then
us
we look at exactly how you're going to design your portfolio.
Peter, can
Because
you tell
we're
us what
again
REIT is?
wanting.
REIT
Yes,
is-
go ahead.
Could you please tell us what REIT is, just for our audience so they can understand?
Yeah, sure. We've just started with a group called Legacy Investment Trust. They're a new fund, and we're gonna talk about them in a minute because they are one of the smallest. THUR, you'll have just seen those coming onto our shelf, but we'll also be talking about our largest private REIT as we get into the next few slides. And really, that's what that last orange column is about. We're always going to be looking for their previous history, the criminal checks, the credit checks. Have they done it before? That's what we call being investment grade. But we're also very, very much not forgetting our roots. Our logo is a tree, and we really do have our roots in real estate. So we're looking for real assets. We are looking for property-backed security. We want to know that they don't have a huge mortgage on the property or an unresolvable lien or issue with development. In most cases, we're looking at funds that have been around for quite some time, that have been reviewed by other dealers, by other analysts, and we're making sure it's always not correlated to the public market. It's going to perform the way it's going to perform based on its own merits. And that's really key for us as we go forward. That gives us what we call a mixed asset portfolio. And our clients have benefited from that because they're then able to work with mutual funds and stocks. Maybe they've got a Questrade account, but they come over to us to work with their real estate, with their mortgage investments, and with other finance products that can generate those yields between 6 and 8%, and equity appreciation up to 20% per year. The advantage of that from a theoretical standpoint, remember that guy Markowitz who wrote that paper on having a diversified portfolio? Well, we're very diversified. We are now not just dealing with bonds and cash and mutual funds and stocks. We're now talking private real estate. And THUR and I have numerous conversations about, well, who are some of the best real estate investments in the private market? And if you think about it, when you look back at, what works best over different market conditions, there's an argument to be made for having as much as 50% of your net financial assets allocated to real estate. In fact, I think many of you know this from people you talk to. Some of the people who've made the most money or have the most wealth have a concentration in real estate. So in our case, we just make that possible using your RSP, your TFSA, or your non-registered accounts. So now I wanted to give you a little bit of an overview of some of the top performers in our marketplace and chat a little bit about the new entrants in the marketplace. And if you'd like after this, I'm happy to provide you with links and a few of these notes so that you can research it yourself. But I want to give you an idea of, what are the top investors and what are they offering and what are they investing in, so that you can get a little bit of sense of how some of the larger institutional investors, the larger private funds on Access Shelf are investing in real estate. Well, I'll start off with the elephant, the big performer group called Centurion Reit. They're out of Toronto area and have been active in our market since 2006. In fact, it actually goes back to 2004, 5, 6, because Greg Romont, the founder and still the CEO, actually used his own personal funds and his friends and family's money to buy a few apartment buildings in 2004 and again in 2005. See, Greg was coming off of a long career as a derivatives trader, a very sophisticated trader for banks and stock exchanges. And he noted that in all that volatility up and down in the markets every day, trying to hedge against the pound versus the euro or the US dollar versus the Canadian dollar, he was tired. It was busy. And so he was putting money into real estate because that's where he knew it would be secure. He knew mortgages would get paid down, renters would pay rent, and the net operating income would go to his savings. Well, as he built that out, 2006, he decided, hey, I'm onto something. We can put this together in what we call a trust, or a real estate income trust. And that structure since 2006 has grown. It's now approaching 3.7 billion. And it's what's called a mutual fund trust, which is a Canadian structure. And it invests in multi-unit and student housing buildings across Canada and a few in the US. It pays a monthly yield of 4.5%. So that's 4.5% per annum paid monthly. Otherwise, that would be a very, very good investment. 4.5% per month would take care of a lot of things for me. And then there's also equity appreciation. So every year we see another 4 to 5 to 6% in equity appreciation. And so the total return over the last 10 years has been between 12 and 18%. And what we like about them is that they're at a size now and a scale that they're very efficient with our capital. And so we would give them sort of marks in our approach to it and saying, look, they're the tops in size and the best in track record. That would be a core holding. We still have to do what's called a KYC, and that's what THUR and I do every day with clients. We work with them and figure out what they need to know and what we need to know about them to make sure it's the right investment and it's suitable. And all of this is dependent on disclosures that come by way of an offering memorandum, a legal document that tells you how the funds will be invested and what your rights and obligations are as an investor. The next one I'll highlight, we talked a little earlier in this call about the metal star cut building in Mexico City being sold to Mark Zuckerberg's office or family office. That's Mark Zuckerberg's own investment firm. He has one, and he bought it from this group, ICM Property Partners Trust, or we call it ICM PPT. This is a Calgary company, about 35 years old. Strangely enough, the founder, a gentleman named Bruce Timm, ended up working out of Germany for many years. In Germany, very wealthy families were looking at where to invest, and Europe's expensive and not a lot of opportunity at times. So he was bringing money from West Germany to invest in office buildings in Calgary, Toronto, New York, and Dallas, and creating a portfolio. Well, as that grew, more and more people wanted to be a part of it. And we have ICM PPT today, which is built on that foundation, but now allows everyday investors, myself included, to participate. They're a bit different. They include commercial and office buildings in their portfolio. So again, if you're used to the Centurion story and you're buying apartment buildings in London, Ontario, this is quite different. This is commercial or office buildings in Atlanta, in Fort Worth, in Mexico City, and in Canada. And again, strangely enough, there's lots of business in that area, lots of growth. You look for tenants like banks, insurance companies to be your anchor tenants, and you sign them to 10-year leases. And the result is 4.5% annual, paid on a monthly basis. And again, that target of about 7 to 12% return. They've done a little less well. Residential has spiked in Canada, but industrial and office and commercial are actually been hammered a little bit. So their returns actual are 9 to 11, down from a 10 to 12 estimate last year. But they are still paying out return of capital. So when you get a check from them, if it's non-registered, you're not seeing a tax bill along with it, which is very, very helpful. And then we have a few others that are in that same category. Avenue Living, about a $1.5 billion company, a REIT that invests in multi-unit residential in Western Canada, paying around a 4.5% per year. Its actual performance over the last few years has been 6 to 7%. We have Invico, which is a mutual fund trust. They get into alternative finance. So they'll fund oil and gas, they'll fund movies, they'll fund and loan money to service companies, and they've steadily performed at 8 to 12% and have won numerous awards across the private fund marketplace. You do find some investors say, this is great, but those 4 companies, they make big pools. That's a fund. I'm not really into a fund. Tell me how could I invest in a specific building? Well, then we have companies like Western Wealth or Clear Sky that actually put together just one building at a time. And you can choose to invest in, let's say, Albuquerque, New Mexico, or Cleveland, Ohio, or you can get $10,000 exposure to a new apartment block in Houston, Texas, which has got one of the fastest growing economies on the North American continent. And so that's a very interesting category to be in. We've seen returns there between 3 and 20% by owning a building for 3 to 5 years before selling it. So from our perspective, lots to see there, lots of different options in the market and lots of options, I think, for diversification. When you look at it from an investor perspective, it might seem a little bit complicated. And what's going on? Like, how can I be a part of that? I have so much reading to do. Well, it turns out there's really great websites for each of these funds, and each of them provides a lot of material and reporting that's really key for our investors. And each of them also provides what's called a Know Your Product presentation to each of our advisors. So Tahir, Ken, his colleague, myself, many of the rest of the team here at Access Capital, we're advisors, so we have to know this stuff. So if you have questions about any of the names you see here, either Tahir or myself can help you with that. Last few that I think I'd highlight for you, nationwide, the car wash group that I was telling you about, they have an 8% pref with a projected 7 to 12%, may actually be closer to 20 based on the very rapid increase in property values in Vancouver. Levante Living, currently raising about 15 million a quarter from both EMDs like Access and larger investment firms. They're buying retirement residences. There was a lot of concern and a drop in price in certain retirement residences over the last few years, because if you don't have a good management model, how do you handle long-term care? How do you handle seniors and retirement housing? And yet, we're right at the start of what really is a very significant run-up in effectively seniors and retirement and people who want to have active living but don't want to have a big yard. And so these retirement residences, from independent living right through to long-term care, are an amazing category to be investing in.
All right, Peter,
so I think you can see there's quite a bit there that we can talk about that you may have questions about. I'll highlight again, sort of to finish off, Centurion Reit. This is just a case study of what we've seen them grow to over 3.7 billion under management, with 273 staff in Ontario and all the big cities across Canada. And it gives individuals a chance to really take their love for real estate and their interest in that sector and that category and invest without having to manage it. I'll finish off. I don't want to take up too much of your time here, folks, and we can certainly have some discussion, but I'm a landlord as well. I have 3 rental properties in Calgary. It for a while was my plan to have one for each of my kids, because it's a great way to build equity. And when they go to university, they either can live in it or we can sell it and monetize on that and pay their tuition in the Canada or the US. That's a great spot to be. But what I've been finding is, my goodness, management is tough. Here I am trying to negotiate a $3 million trade, and the next I have to talk to somebody about why the toilet is plugged, or could you replace the toaster? Somebody put something in it and we had a fire, or I ripped the handle off the microwave. Could you please bring in a new microwave? Now, I don't mind being a handyman. I'm sure some people love it. I would say I've grown to not love it now. But what I love is putting money in a REIT, because these are properly managed apartments with new utilities, new gas stoves or electric appliances. They have long-term growth potential. My money is very tax efficient, and no one calls me to replace the toaster. So I would definitely suggest that after you finish this call, if it's of interest to you what you're seeing here, make sure you chat with Tahir and his colleague Ken, or feel free to touch base with me. We'll talk to you about what's available, because if you do the numbers, you're going to do just as well with a lot less heartache investing in a well-managed REIT as you might in your own rental property. I've definitely proven that case. What we look at as we kind of make sure that this really fits is that there's good distributions, that you can get your money back out if you need to, that you're getting tax efficient funds in your accounts, and that you get to participate in profits. As the REIT grows and has profits, you get a piece of that action. And what sets offerings apart for us will really help you as a business person as you manage your own funds. But I want to mention one other thing. As we close here, many of you are very active networkers. You're meeting with people day in, day out, clients who have significant funds. Maybe they are your next client for a staging or an interior decoration or the sale of their property or an assembly or sale of another property. In the cases where you run across folks that are looking at how do they participate, how do they get more leverage in the real estate market, how do they invest more efficiently, I'd suggest you refer that client to THUR. We pay referral fees that are generous, that are part of the compensation disclosed to all clients. We don't do anything shady or under the table. This is all under the regulations, but it's required that it go through a dealer. And what THUR asked me to mention today is just to remind you that some of our best clients have come by way of referral. So we work with our advisors, of course, to help them set up business relationships that are mutually beneficial. You may have a client, they're doing some work with you. If you refer them to THUR and they're doing some investing with THUR, some portion of that commission then can flow to you. And fully disclosed, there's a very simple process to do that. And the beauty of it is you're helping them towards all these advantages of regular income, regular equity increase in investments with great track records over a decade long that are not directly correlated to the ups and downs in the public market. So I hope you found that useful, and I hope it gives you some ideas of where you can participate, where we can work together as professionals. I'm happy to take questions, or to hear if you had any comments, feel free to add those in.
Yeah, thank you very much, Peter, for giving such a detailed presentation. I request all participants to open their mic if they have any question. Basically, this is exempt market dealer raising private capital. EMD is called exempt market dealer. Excess capital or advisors are the EMD license, not only Ontario with the Ontario Security Commission, but other provinces in Canada. So if you make any referral to me and your potential investor do business, the money is paid directly by the excess capital. Just like in real estate brokerage, the brokerage will disburse the money and they will sign a sort of a small referral agreement between the exempt market dealer, which is excess capital advisors. And then when the transaction is completed, you will be paid that portion. It is deducted by EMD, which is kind of brokerage, and then pass it on to you. It's a great way of generating revenue, getting some extra income, and you have the opportunity to make a referral if you feel. I will be posting this on YouTube and sharing on LinkedIn and all of the social media platforms. So if you have any question, please feel free to ask Peter before we say thank you to him. Jacqueline, you have any questions?
Not at the moment.
Okay, wonderful. I believe, let's see who else is here. So Jalaluddin, you are a CPA, do you have any questions? Probably not. So we say, Peter, thank you very much for coming in and doing the presentation. We'll share this on YouTube and then I'll share it on all my LinkedIn and you will
Excellent.
be tagged to share this information. Thank you
You're very
much.
welcome. And I wish to thank you for the opportunity. Great to connect as always. Great to meet colleagues who are headed the same direction. And if there's any way we can assist you as you look at the private market, by all means, do reach out. Thanks very much, Tahir.
Thank you very much for joining. Thank you. All right. So Jacqueline, now we have, I would like you to say something about your work, what you do. You have 1 minute to tell about yourself, your business, clientele, and give your name and email, whatever you want to do. 1 minute.
Sure.
Go ahead.
Well, thank you so much. Sorry, I just had a wallpaper guy sending me a message. My name is Jacqueline Little. I run a design business. As you see, it's Jacqueline Little Interiors, Inc. I do everything from kitchen and bath design to full renovations. From full renovations, I mean, if I have 3 floors, my largest project to date was 1.2 million in a home here in Toronto in the Leaside area, which a lot of people know is beautiful. I have my website. You can actually, if you go onto my website, the pictures are beautiful, but I also have a newsletter I enjoy doing a lot. I have a team anywhere from architects to the contractors to my creative brain in doing the design portion. So I really enjoy what I do, and I enjoy working with the clients and creating beautiful spaces.
Wonderful. We're going to definitely connect with you because we're in real estate. So Jacqueline, we're going to connect. So you are in Toronto, correct? Is that right?
Yeah, I'm in Toronto. Yeah.
All right. So we're going to get back. So now Ken Finch, he's my partner in exempt market dealer business. And he's also DR with Access Capital. He's a FRI fellow, Rules Institute of Canada, like I am. And he's also a CPM, certified property manager. So Ken, you got a 1 minute.
Perfect. Thanks to you. Sorry, I was connected on my phone earlier just because I had to deal with my daughter here. But yeah, no, it's I'm Ken Finch. I'm partners with THUR at Access Capital, and also a real estate broker with Royal LePage. But yeah, no, that was a great presentation by Peter. he really outlines all of the the details with the different types of investments and what the expected returns are, because like he said, real estate investment is basically the best investment on earth is earth. So and the I'm a landlord as well. I have a rental property, and at first they're good, and then after a while, on the coldest day of the year, on the long weekend a few years ago, the heating system broke down in my building. I'm on vacation trying to deal with contractors. So, you don't have that to deal with anything like that when you invest in a REIT. So it's professionally managed, and, it's usually like the phenomenal portfolios for, ICM and, all of these private REITs that are available. Anyone that's been around for several years is, definitely one that you can trust and one that has good management. So, the returns speak for themselves. Obviously past returns can't, you can't guarantee those in the future, but, the real estate industry is strong. So it's, definitely a great investment. So, thanks to THUR for organizing this. It was a great event.
Thank you very much. Viewers, the REIT means Real Estate Investment Trust. That's a term they use. Real Estate Investment Trust called REIT, where some group or companies, corporation, they buy lots of lands and they borrow money, ask for money, and it's funded through a private channel, which is called EMD, private capital. So lots of people who are raising private capital for a real estate investment project, they come to exempt market dealer who is licensed, and they are exempt from certain protocol. Then their investment opportunities are not on a stock market. So that's why they call exempt market dealer. That means this investment opportunity is not coming through the stock. So now I have one more gentleman. He's still there. Jalaluddin, he's a CPA. Could you please open your mic and say something about yourself before we end the program? Jalaluddin, CPA, are you there? All right, so he's not responding it. First of all, I want to say thank you to Peter and all the participants who attended our fourth Global Connectivity Network, which we to building partnership. This time, because of traffic, because of time, we have a little bit less participation this time, but hopefully with our next meeting, we'll have more people to participate. So I take this opportunity on behalf of Realty Coffee Talk and myself as a host. I thank you very much for watching. This program will be uploaded to YouTube channel. If you want to watch all episodes, we have more than 100 episodes. Visit realtycoffeetalk.com and subscribe my YouTube channel, and you can watch them. And anytime we upload any program, you can also see it. Tonight, I will be teaching. I will be doing a Realty Coffee Talk or Awaz Entertainment, which is broadcast on Facebook, social media, TV, channel 580, and also Instagram and YouTube. And it will be 7 o'clock. The topic is today is tip for home buyers, new home buyers tips. So if you want to watch it, you can call in and ask questions. Thank you very much for watching, and we look forward to see you next conference next month. Take care. Bye for now. Thank you very much.
Thank you. Thank you.
Bye-bye.